This morning is Kevin Scully of NRA Capital. Now, Kevin, US blue chips fell in 8 out of 9 sessions. Are we in a bearish trend here?
Not quite yet. I think what we are doing is that we are seeing the rally which we saw from January to April slowly being taken back by the market. I think that rally was preemptive. We thought that the problems in Greece had been solved. We thought China would have a soft landing. And we thought the US economy was recovering. So I think two of those have actually declined. And I think that's why the market is giving back some of the preemptive gains it made in the first quarter.
And Kevin, what are the implications of a possible Greece exit from the Eurozone?
I think the key thing is whether it's an orderly or a disorderly default. I think if it's a disorderly default, i.e. they don't actually abide by the budget cuts, the funding that the ECB is supposed to get them is cut off. And then basically what will happen is that all the Greek sovereign debt holders will actually have to write off a significant portion of their debt. And ironically, the largest shareholder of that bond, Greek sovereign debt, is actually the ECB. Following that, I think you need a significant recapitalization of the Greek banking sector because the whole sector is likely to default as well.
And what's to come for Spain and other countries in the European periphery that have a long way to go before closing their budget deficits?
Well, I think Greece is about 1/3 the size of Spain's debt, and I think Italy is probably 4 or 5 times that of Greece. So I think basically there are a lot more problems coming out of Europe. I think we have to look at what happened to Argentina when it defaulted and how it actually managed to recover. It actually had to bite the bullet, default, have negative GDP growth of about 10% before actually starting on a significant economic restructuring and then a long road to recovery.
Well, let's turn to the Singapore bourse. Are we seeing a shift away from cyclical stocks because of the global economic slowdown?
Well, I think the Q1 reporting season is actually quite important. It actually shows that the global cyclical plays, the airlines, the shipping companies, even the commodity companies, are reporting a significant decline in earnings. And I think that reflects the health of the global economy. So I think that will continue. So I think investors will shy away from those because there's actually no visibility. I think they're probably looking at another weak year in 2012, probably some signs or hope of a recovery in 2013. So it's too early to be in global cyclical plays in Singapore at the moment.
Well, what about technology stocks specifically? Should investors accumulate, and if so, what are the counters to buy?
I think technology had a terrible year last year, so I think they had their sell-off last year. We had the tsunami, we had the floods in Thailand, we had a weak US dollar, their margins were squeezed. This year, I think a lot of them are actually seeing a significant improvement in their business, probably starting in Q2 up to Q3 and some even to Q4. I think in the sector, you should look at the semicon sector. I think we like ASTI, we like AEM, we like Armstrong, and we like Broadway in that sector.
And Kevin, all three local banks have reported strong growth in lending as well as trading and investment income. Should investors turn bullish?
I think it's a bit early. I think you should wait for the banks to correct. The banks are actually placed on the Singapore economy. Singapore is an open economy. If the global economy decides to become a little bit weaker because of the problems in Europe, then I think banks will probably underperform as a whole. I think the banks overall are about 10% below fair value. So look for another 10% correction in the banks, and probably then you can start doing some bottom fishing in the banking sector.
Well, Singtel reported a 30% surge in fourth quarter net profit. What's your call on the stock?
I have a hold on the stock. I think the earnings are there. It's probably fairly valued with regard to its peer group, about 12 times forward earnings. I think the key attraction for me in Singtel is its dividend yield. I think if you're looking for something that gives you comfort and stability in terms of dividend yield at 5%, Singtel probably offers a medium-term investor a good yield exposure.
And Genting Singapore's Q1 net profit dropped 31%. Should investors cash out on the gaming counter, do you think?
I think it was a bit overvalued. I think I've said historically that it's probably trading at the high end of its peer group. And probably at the 150 level, the stock would start to look interesting. So I think if it continues to actually give up some of that PE premium they enjoy because of the expected strong growth in earnings, and closer to the 150 level, it's probably time to accumulate for the medium term.
And lastly, more companies are focusing on opportunities in Myanmar. Should investors ride on this momentum?
I think initially it'll be a concept play. It's a bit like what happened to the Vietnamese market when the US lifted their sanctions. There'll be an explosion of interest and influx. And after 2 years, you probably see all that fluff disappear because the companies are not actually able to execute or extract the earnings or profits that they expect from the market. So it's a bit of a concept play now. You have to ride it for 2 years, but probably after 1.5 years, you should probably get out if the companies cannot deliver what you're expecting.
Okay. As always, thank you very much, Kevin. Kevin Scully of NRA Capital there. And that's your business news. Back to Suzanne and Steve.
All right, Yvonne, thanks.